All right, up next we have an exclusive masterclass on RTA investor servicing, AML and risk profiling for onshore and offshore funds. This session will delve into critical topics essential for navigating the complexities of fund management in both onshore and offshore jurisdiction. Covering the AML masterclass, we have Mr. Praveen Shankaran, Chief Operating Officer, Fund Services at Kfin Technologies. A big round of applause for Praveen.
Good evening. So today's topic, although it's very important, came at the last. I can see the time. It's almost 4:30 Friday. So I'll try to wrap up as fast as possible, and I'll try to cover all the important aspects. I'll not dwell into what is money laundering. I can understand from morning there are a lot of the entire audience here is quite learned. So I'll just quickly skip the definition part. However, what is more important is to understand that what are the various regulations which are applicable from an AML standpoint. Now, there are two entities that I'm talking about. One is SEBI, which essentially handles all the domestic part, including mutual funds and AIF. And we have GIFT City, where IFSCA is the regulator. The way I've made my presentation, I've tried to converge a lot between SEBI and IFSC and the commonalities of both the regulators, because AML practice is pretty much governed by PMLA. And I try to cover topics which are very common and the practices which are very common. So before I move on to my presentation, there are a couple of misconceptions about AML practices that is there in various organizations that I've been working with. So I had a chance of, creating one of the products almost 4 years back at Kfin, where we tied up with a couple of data providers for getting the sanctions list, getting all the PP list and adverse media. When we started working with most of the companies, and one of the notions, even today, most of the company has is, if we do a screening of a customer, that's a fully compliant AML practice. The second myth is, most of the organization, they think that if I do a screening against the SEBI debarred entities, or any entities which is there in a UAPA list, or any entities which is there in the weapons of mass destruction, that is as good as complying with the AML guidelines. However, AML is much beyond screening of your investors. There is another myth that that is there in most of the organization is, we need to screen the investors only one time when they onboard, and that's it, we are done with that. Now, establishing an AML practice is very important for every organization, and the AML practice does not start or end with the screening. If you see on the screen, it's an 8-step process, and this is exactly the one that we have also shown when we went to GIFT City, and the regulators have also vouched for this 8-step practice. Now, if you see the first step, it starts with appointment of the principal officer. This is one of the most important steps, and that principal officer has to be an independent person, independent of business, should have knowledge of AML practices, should know the roles and responsibilities of how and when to report something, should be able to identify what is a suspicious transaction. So this is one of the most important activities and this is the preamble of starting an AML practice in the organization. The second one is to do the enterprise risk assessment. Now, it's a very wider term, but I'll only restrict to what is relevant for AML. Now, when I say risk assessment, the risk assessment has to be done on the basis of the profile of the investor. The profile will include things like the income levels, the source of income, the source of fund, geographies, the products and services that we are offering to the investor. There are a lot of different criteria. The occupation of the customer. So if you actually read what is there in PMLA about KYC, it stands on 3 basic principles. One is, how do you identify your customer? And everybody knows that we always take proof of identity and proof of address to identify a customer. The second important aspect is customer acceptance. Can you accept that customer to invest? And third is the profiling. Now, the second and third is very important from a AML standpoint. The second one, which is whether you can accept a customer, is basically the screening part. Now, can we accept a customer who is involved in any kind of a financial theft or maybe some kind of money laundering activity if it is known to you? Right? So these are some of the questions that comes to us in our mind, but it is still not clear. While all the, if you see the guidelines, it tells you that you have to do this screening, you have to do that screening, but it does not tell you what are the steps that you have to take. That's when we have to identify what are the sets of customers that will accept it. So doing a risk assessment of your customer is very important. Now, once you do a risk assessment of your customers, it is also very important to lay down the AML policies and procedures. Now, I'll give you a very simple example why it is important. You must have encountered a situation where, one of your providers, if you're using any kind of a screening software, would have told you that, this particular customer is a PEP, politically exposed person. Now, what's the next step that you will do it? This particular aspect is still open. However, it has to be there in your policy. It all depends on what is the kind of risk appetite you have, what is the kind of enhanced due diligence or a simplified due diligence you will follow. It has to be defined in your AML risk policy and the procedure how to deal with that particular situation. Now, we keep screening investors, we keep getting a lot of alerts that a particular investor is a PEP or a relative to a PEP, or maybe it is figuring in some adverse media. But what's the next step? That nobody will tell you, that your third-party provider will not tell you, that even an RTA cannot tell you. That is something that you have to lay down on the first day when you want to have your AML organization right. So, very important step is the organization have to lay down the right AML policies and procedure, how to deal with every situation. Now, the fourth important point is customer due diligence. As I said, it includes 5 different things. One is KYC, which I already told. You should know your customer, which is, accepting the POI and POA. Sanction screening. Now, sanction screening, we have a lot of different tools today to do the sanction screening. But what is a sanction? That is also a very important question here. So I will leave that part to the next speaker, which is Pallavi here from Dow Jones. What is a targeted sanction? How a sanction? What is the definition of a sanction? The customer risk assessment, which I've already covered, enhanced due diligence, we'll get to that part when we go to that slide. And the ongoing monitoring. As I said when I started this slide, that one of the misconceptions is we have to screen a customer or we have to assess a customer only when we onboard. But that's not right. Because there are a lot of activities keep happening, the status of the customer keeps changing, there are a lot of news keeps coming, and we have to do an ongoing monitoring. Now, ongoing monitoring has 2 parts. One, and that is again, because of my experience with, implementing the AML product across various organizations, I realized that, ongoing monitoring is also seen in a way that whenever there is a transaction is when I will do the screening. That's not right. If you have onboarded a customer, you have to do a continuous screening because you have already laid down your policies, you have already laid down the risk assessment of each customer. The risk will be either high, medium, or low. Today, an investor or a customer is a low risk because of a virtue of a change, or maybe an adverse media news. That customer has become medium. So your treatment to that risk will be different. As I said, the targeted sanctions, that I will leave it to Pallavi to explain. Suspicious transaction monitoring, which is a very important part of AML. Now, there are defined parameters in the industry how to identify a suspicious transaction. The definitions are very generic. However, what we do in most organizations is we do the bare minimum what is told by the regulator or the industry body. Now, you have to understand that a suspicious transaction by its very nature is different than a normal transaction. Your risk policy and your risk officer and your compliance team has to define what is the definition of a suspicious transaction. And it has to be more than the bare minimum what a regulator or an industry body tells you. I'll give you a small example of a bank where I believe the AML practices are quite prevalent and quite strong. In a bank, there is always a drive to open CASA, right? Current account and saving accounts. Now, one of the easiest way of getting saving account is to open a salary account. Now, if you open a salary account, what is the first credit do you expect in that account? Salary? What if it doesn't come? For 3 months, no salary. That's an AML alert. That a regulator will not tell you. That you have to define. You have to be that smart to understand the nature of this account is salary, which means in our investment terms, the occupation of the customer. It is very important to capture the risk profiling or the customer profiling. And that's why filling the form is not a necessary evil. It is very much required. Right? Now, the AML governance basically covers 3 very important aspects. One is the awareness within the organization, which is basically training. Whom to train? You have to train your employees. And who are those employees? The employees are someone who faces the customer, someone who is a senior management professional. They should also get trained on the AML practices because they are the ones who will clear or approve some high-risk transactions or high-risk onboarding of customers, right? And then the record keeping, every regulator has defined the minimum tenure up to which you have to keep your records. There are different tenures, but standard 5 to 6 years is when everyone has to keep the records for the purpose of audit, right? So I'll quickly move on. As I said, it is very important to appoint a principal officer, and that's the first step for AML. The principal officer has to be independent of business and should be able to identify suspicious transactions, should have knowledge of the anti-money laundering guidelines, the PMLA guidelines, and should be able to function independently. Risk assessment, I've already covered that part. You have to identify the risk, not when you start your business. You have to identify the risk based on the guiding principles, how you have to rate your customers into high, medium, and low, and that's when you will allow or not allow a particular transaction. As I said, the AML policies now, on the right-hand side, which is more important, there are a lot of deficiencies that I've seen. Now, this I have categorically kept here because there was a time in IFSCA where the regulator was asking to fill some due diligence forms to every company. And there was a huge disconnect. And a lot of forms were rejected by the regulator for a simple reason that it was not comprehensive. When I went through, obviously for my client, when I went through all the policies, these were the deficiencies that I could find out. It was just, they were asking very simple questions and we were, most of the clients were answering in yes or no. What they were looking at, whether you have a comprehensive knowledge of the entire AML guidelines, whether your company is ready to do that. Now, the thing is, the regulator is not ready to compromise on that. They will come back to you and they will penalize you very heavily if your entire framework is not ready on AML. Customer due diligence, as I said, it's one of the most important parts. Now, the due diligence has different definitions. I gave an example where, a very common scenario where once you screen a customer, it will come as a PEP. What is the next thing you have to do it? All right. Now, that is something that your organization has to define it. There are some varied ways of doing it. Now, I don't know whether you guys know, but there are 2 kinds of PEPs. One is by virtue of election, and one by virtue of appointment. Both has different risk. One is a slightly lower risk, one is a higher risk. Now, there is another definition in PEP which is called relative to a PEP. I'm not sure whether you have seen those screenings or not, but this is a very important category where you will understand that you are not a PEP, but you are relative to a PEP. What is the kind of risk treatment you have to do? Should you accept a transaction? Should you stop it? Or should you just ignore it? The third choice is not at all there. You have to either accept it or reject it. If you accept it, you need to have a framework and grounds to approve that transaction. And those grounds will come from your risk policy. As I said, there are different types of due diligence. Simplified due diligence, you obtain some additional documents. The value of the transaction is low, you can go ahead. And obviously, if the value of a transaction is defined in your risk policy that this is my appetite to take a risk, I'll go ahead. Enhanced due diligence is when I take more proof towards source of fund, more proof towards additional document like bank statements where I can establish that the source of fund is not from an illicit source. So enhanced due diligence also has to be defined in the policy exactly how you will allow or disallow a transaction. Now, as I said, AML is not at all about uh, just one-time screening. Ongoing monitoring is very important because both sides of the world, where your investors and outside, there are a lot of things which is happening. There can be instances where you have screened today, your customer is a green, low risk, and after 6 months or a year, the customer's name got added in one of the financial crimes or any kind of adverse media news. And there are no transactions, but you have to flag it off. You have to flag the particular customer, and that's a part of ongoing monitoring. You have to keep screening your customer as and when there is a change in your records. By virtue of that change, maybe the risk profile of that customer changes, or the change on the database side. Whatever database that you're using it, if there is a change, there is an addition of the existing customer which was screened as a low risk, gets added in future. And why risk assessment and risk scoring is so important? The reason is there is a review mechanism that every regulator enforces. I have not seen that in case of mutual funds that much, but IFSC is very clear that there has to be periodicity in terms of when you will review a customer. It is equal to how banks are doing. If it is a low risk, 5 years. If it is medium risk, 3 years. Otherwise, 1 year. High risk customers, 1 year you have to review it. All right. Targeted sanctions, I'll leave that part to Pallavi. Suspicious transaction alerts, I've already explained all of you how, although, suspicious STR reports, everyone knows, FIU issues, STR alerts. What are the kinds of STR alerts? We have almost 9 such alerts which everyone follows, which is a mandatory one. However, FIU has come back and given us a list of another 43. That is still not in practice, but it can be beyond 43. It all depends on you. Now, so far we have been working on the bare minimum, whatever regulator or industry body has told us. But I really believe that it is high time that we should review our practices, the kind of transaction, and come out with a framework which is beyond bare minimum. AML governance, as I said, very important, 3 important elements. One is training, another is senior management. Senior management is important because senior management is the one who will ensure that there is enough governance in terms of the employees following the policies and procedures, and they have to establish by way of records. And they have to approve all high-risk transactions, and they have to ensure that regular audits are happening. Independent audit is very important. That independent audit can be done by any firm, or if there is enough documents available in your own company, that audit can also be done by the internal auditor, provided it is reported directly to the board. Both ways, regulators are fine with it, but the audit has to happen. And at least once in a year, that audit has to happen. The audit coverage has to be for the policies and procedures, the efficacy of policies and procedures, whether it is being followed, and the transaction which have been marked as suspicious, what is the kind of treatment we have done, what are the various alerts that got generated during the year, and how that has been treated. That's it from my side. Any questions on AML before I hand over to Pallavi? All right, thank you.
All right, thank you so much, Praveen.